the stock market is highly volatile now. Luna, the crypto market have just pretty much crashed, right? So now the key thing is this, is that where do we put our money next?
Let's find out.
So I think recently it's been really insane. I think the last 6 months, oh my god, the most or many of the gains that was gained in the last 2 years during the pandemic run-up, okay, have almost been lost just in the last 6 months. That's insane, right? From the crypto market all the way down to the stock market, so much value have just suddenly evaporated from the market. And you know what? It's very painful because I also invested, of course, in the stock and crypto market. What's your point of view, Ivan?
My point of view is that I too, right, I'm an investor in the stock market, whether in the US market or the Singapore market. And I realized that there's one thing I'm grateful for, and that is I have real estate.
That's true.
Yeah, so personally, right, I'm a believer of like owning income producing assets. And of course, if you're talking about real estate, we get this from rental. And if you're talking about investing in the stock market, right, we are not actually investing into pieces of paper.
Yeah.
We're actually buying parts of companies, right, that produce profits or revenue for some.
Yeah.
And because of this, right, this is why I believe that there is an intrinsic value whereby you can calculate out the full cash flow for these, and you can get value from that. As opposed to like crypto or gold, right, where inherently it doesn't produce income.
Yeah, so I think of course we can go a little bit deeper about crypto and gold, all right, in the sense that of course most people invest in that because they believe in, okay, at least I cannot say most, right, some of the people invest into that, right, because they believe that that is the technology of the future, for blockchain technology, right, but of course many unfortunately invest due to riches. That means they want to hopefully get 10x their money and exit out and of course become, I don't know, millionaires or rich or wealthy, right? And that's the wrong mindset to, of course, put into or put forward when you want to invest. Okay. So now, of course, with market volatility, I think no matter what, people will start panicking. All right. And my opinion is this: is that the experienced investor, or in a way the braver, all right, will continuously dollar cost average downwards. Whereas I would say that majority of the market, on the mass market, they start panicking and exiting. So if they were to panic and exit, okay, the key here is that where would they put their money next?
Yeah, so my take is that the stock market having dropped from like I think 100% to maybe 50%, some even drop 80%. Like when we look at like, for example, companies like C Limited, which is like Shopee, right?
Yes.
It has dropped from like $370 to now about $80 range. That is like an 80% drop.
80%. I mean, I even invest in Disney, right, for my kids because I mean they love Disney stuff, right? So I mean, I think my that particular counter it's also down about 40%.
Well,
so it's still
that's
painful.
normal
Still
for
painful.
like in the stock market today.
Yes.
But it can only be temporary, so it may still bounce back up. But the key is that for your question, right, a lot of our buyers or like a lot of people's emotional stability have been affected
100%.
because of this huge drop, right?
It's sad because I have people coming up to me and telling me that, hey, you know what, my kids have lost absolutely 100% confidence when it comes to investing because during these last 2 years, I think a lot of younger individuals, due to the ease of setting up stock brokerage accounts, I still remember when I first started investing in stock, I still had to go to the bank and set up a account, right? But now it's so easy because with Robinhood, with Tiger Trade, with Momo, so many all come up. So easy to set up an account nowadays. And
even for interactive brokers, right, it takes like a few hours to set up.
Yeah, it didn't used to be like that, like 10 years back, right? So I think the key here is that because it's so easily accessible, a lot of young people have started dabbling into stock market, especially when the news has been so bullish about stock market in the last 2 years. And unfortunately, majority of them who have actually entered in, even in 2021, 2020, late 2020, will have probably seen a negative stock portfolio today. And that have unfortunately made a lot of youngsters very demotivated.
Actually, to be frank, I'm very happy for them.
Why?
Well, they learn this lesson when they're
Early
young,
on, right? Early on,
rather than when they are like 40 or 50, right?
Yeah.
Because I think the whole point is that the stock market is volatile in the sense that it goes through emotions, very strong emotions when people are very excited about stocks, the stock market, the price, right, may run up very high, and when people are very pessimistic, like even now, then the price will go down very low. But the thing is this is where we can get mispricing in the market itself. So basically, right, what I'm talking about is that value is value, okay? But price is not value. Price is what you pay, value is what you get. And hence, right, we are able to get sort of like undervalued gems. So in this sense, right, I would say that if you're talking about the market sentiment, right, I feel that the stock market has been beaten down. People may be running more to hard assets, right? Like for example, real estate itself. And if you're talking about real estate, you still get renters, you still get tenants, right, that will not run away because like the stock market crashes. They still need a place to stay so that they can work and stuff, right? So basically, right, it's sort of like more stable asset itself.
Yeah, 100% agree on that, right? I think some people, of course, the safer ones will put in the bonds, things like that, right? But of course, those that are still maybe more used to the stock market, they might want to put in the property because there's still some form of better returns if you know what you're doing, of course, right? As compared to even just investing in bonds and getting that small little interest through those. So I think mass market perspective, yes, I agree. Many more will look at real estate as a safe haven. That being said, that would of course means that in the next couple of maybe months to a year or so, right, we're probably going to see some run up in terms of property prices. Maybe not in Singapore because there are more and more cooling measures coming into place, but especially in the overseas market, I'm seeing more and more locals, more and more people entering into the real estate in those particular countries. And I think that means that in the next 1 or 2 years, I'm expected to see small little property bull run because of the volatility of stock.
Yeah, so I 100% agree with that. And on top of that, right, there's also the effects of inflation. Because when we look at inflation from a bottoms-up perspective, right, so what do I mean by bottoms-up? Let's put it into a bit more conversion terms. Let's say, for example, today I'm selling apples, and each apple I'm selling for like $1, right? And because of inflation, right, I can sell the apple now for like $1.20.
Yes.
So with more apples, right, that means more revenue from apples, right? This means that I can afford to pay a higher rental.
Yes.
Purely because I'm generating more in selling apples. And from a bottom-up perspective, right, this means that there will be more competition for rental of the same space. So you see, I'm holding everything constant, like demand constant and supply of like properties constant. But when there's inflation, right, and you can pay more, you will be able to like secure more.
Yes, and that's also basically a trickle-down effect of inflation, right? Because money itself, of course, you're paying more money, fiat currency, right, for the exact same thing. And because you pay more for the exact same thing, you just want more cash, and more cash you're able to then pay for more in terms of rental. And that's the cycle of inflation, right? Everything starts from the very core, even component of things like fertilizer. If fertilizer get more expensive, it trickles downwards.
Sunflower oil is going to go up because of
Ukraine and things like that, right? And that's a scary world that we're going to live in the next couple of years to come. It's inevitable. And because it's inevitable, we need to put our money somewhere. Mass market probably run to real estate. The brave will probably continuously go all the cost average into stocks. Right, but be it whatever it is, right, I think the last thing you want to do is to hold cash.
I think one quick thing that I also want to talk about is also about like more affordable housing. You see, when we are talking about luxury products, right, like super penthouses, like these may not be in favor. So in what do I mean by this? Like people may shy away from them so that they can tighten up their belts or tighten up their wallets. But if you're talking about housing, right, that's catering more to like
either from homestay perspective, or mass market product or mass market investment. I think that will generally do well in the next few years to come.
Let's talk about our most famous chicken rice concept.
So basically, what is this chicken rice theory, right? Is that I think if let's say a restaurant sells a chicken rice at, let's say, like $15, right, as compared to a hawker store that sells chicken rice at, let's say, $2.50, right? There's only so much, all right?
When the recession hits,
right? There's only so low the hawker center will be able to sell the chicken rice. Maybe they sell like from $2.50 to like $2.30. All right, that's about it. All right, because why there's a raw cost to the chicken and the rice, which they cannot go much lower. Yeah, and then whereas of course these restaurants, of course, they might drop from $15 to let's say like $5 or $10 because there are more margins over there, right?
You need aircon
yeah,
over there.
Aircon over there, right? So I mean, the key thing over here is this: that if you go for the mass market, which is basically the hawker center chicken rice, right, that is where then you generally be safe because even if your portfolio drops, it will not drop dramatically, and it probably takes a much shorter time to recover as a market as compared to if you go for the luxury chicken rice that you can get in those restaurants.
In short, right, buy the affordable ones,
Yes,
right,
buy
affordable housing or so, right, it's hard to go to zero.
Yeah. So in summary, all right, next coming 1 to 2 years, expect a high inflationary period. Right, things are going to get more expensive. Because of this, you might want to secure yourself down if entering the real estate. You still want your money to grow and hedge against inflation. But just remember to invest into real estate that is affordable or mass market products. Yeah. Of course, in those people who are invested in the stock market, all right, like ourselves, we
Stay strong.
Yeah, stay strong. We are going to continuously call dollar cost average downwards. But of course, that being said, never going to leverage for stocks, especially during this uncertainty. Okay, so just be very careful when you want to pull in more money to the stock market at the moment.
So the key is make sure you do your valuation of the companies itself, right, before you even invest.
Yeah. All right. So hope that you gotten some value. All right. Signing off.
See you.